All right, we have Wallace Fisher here, master instructor. We just finished going over growth investing as a strategy, and you said something about offsetting that with kind of more of a value investing strategy to be able to have something when the market turns on you. Can you kind of explain a little more what value investing strategy is versus growth investing?
Good, but value versus growth. A value play is it gives you opportunity to buy shares of a company that's um, actually below average of the market, right? You know, the growth stocks is above average of the market. The value plays are below average, and the value plays comes into play when, again, like I said, when the market turns against you. You know, value plays typically has high yields, and yields are dividends, like a Microsoft, a Johnson and Johnson, a Caterpillar, those type of value plays. So what big money investors would do when interest rates are high, what they would do is they would take money out of the high growth stocks because they are speculative, and they're more risky again, which is good. But when interest rates are high, they would rather take their money. So imagine having, let's say, $100 million in a Tesla, and with the risk that you take in Tesla, even though it's good, high risk, high reward, or they can take this $100 million and put it in a Microsoft, and they can get a 3.5% dividend yield. So imagine 3% on $100 million. That's a lot of money just to be in it, right? So they would put it in play to those value stocks so they can make the easy money, and that makes the market turn. And so value stocks are, like I said, like that pays a good dividend yield, like a Microsoft or Caterpillar or Johnson and Johnson or
And
Coca
also,
Cola, those type of stocks.
isn't like the kind of the longevity? So like and maybe like a growth stock, it's something that's coming along or something that's shooting up, even though it might be a long-term company like an Amazon or a Tesla, it's still shooting up. Where versus like maybe like your GEs or those companies that have been
Yes.
around for a long time, value more of time tested. I might not have big growth, but I have preserved my money versus almost kind of gambling a little bit and going for the big gain when in a growth. Is that kind of like the difference?
That is actually one of the major differences. Through time, it's going to grow, but it won't grow as fast as as a Tesla, or people looking at Apple as a value play now, but Apple or those type of companies, like Amazon, Google, those type of companies. But the cool part about the value stocks, the high dividend yield stocks, the lower the stock goes, the higher the yield goes. So say for instance, during down market when the growth stocks are flying and the value stocks are not, so the value stocks may go down a little bit, but the dividend yields are going to go up. So people, it'd be more attractive for people to get in. So you may be losing a little bit of money on the front side as far as the stock going down a little bit. Let's say 1, 2, 3%. If that, but you're growing it in a 0.5% more, or maybe 1% a year more in the yields, and that makes it attractive. So
Mm.
through time, you're going to grow through time, but at the same time, every quarter you're going to gain extra money, for dividends. And so, to give you an example, that's one particular stock, Microsoft. I get $4,800 a quarter almost in Microsoft. So that's almost $20,000 a year. And the stock grows, but when the market turns down, I can really depend on that dividend to grow my portfolio still, because after each quarter, I'm almost not guaranteed, but almost guaranteed a really good payout. That's, like I say, $4,800. It depends on what the stock is or whatnot. Maybe just a little bit more, or maybe a little bit less. But that's a big deal when we
That's
come into.
amazing.
I got two or three of those in my portfolio, and now I got 60 to $70,000 a year coming from dividend yields, and I got high flying growth stocks, and my value stocks are not doing so well, but I'm getting paid dividends. Or my value stocks are doing well and my growth stocks are not, but the dividends also, is making my portfolio stay either afloat or higher.
That's amazing. So it's like aggression with the growth, safety with the
Value.
value. You know what I mean? And I think you're talking about something that's very, very important, which we're going to go into next, is knowing how to find companies that have good dividends so that you're getting income whether the market is going up or down, because I think what you're saying right now specifically is even if your stock is going down in price, when you're doing value investing, your dividend is consistent. So you're still going to make income. So thank you for breaking down the value versus the growth mentality. And next we'll talk about income, or in the next lesson, we'll talk about income investing and how to make sure we're getting a good dividend.